well, not quite there yet, but almost, into our 6 months of the year. Pretty interesting. Hopefully you've made the first few months count, right? That's what it's all about. What we're going to talk about today is just real quickly going to run through the markets. Going to talk about some simple strategies that we can apply every trading day. Simple strategies that just simply tell us, what we need to be taking action on in the marketplace. So, nothing super complicated. Nothing that's takes a lot of time to do. Just super simple stuff that works. So we'll start over here in Forex. Let's begin over here actually. We've got some news coming up today, and I want to make sure that you guys are prepared for that. If you don't have a news calendar, get one that you can check every day and be sure that you're aware of what's going on in the day, because obviously there's a lot of things that happen. We're a very headline driven society nowadays, just the entire world is. So obviously, watching what's going on with tweets and things, those can be impactful, and those are unexpected. We can't do anything about that. But then there's a lot of news that's planned that comes out, and when we've got planned news, very often the results of that, can potentially be catalysts for some movement in the marketplace. And today, for example, we've got some manufacturing news coming out, and that's always interesting to watch. Not interesting to watch as in, waiting with bated breath on it, but interesting to see what it does to the marketplace, because it is kind of a leading indicator. If we've got things happening, supplies being purchased, all the things that are needed to continue moving forward, that's a good sign, because it means that we're on a path for increased economic recovery or just growth, right? If things are not as good, then if there's not a lot of activity taking place and orders are down, then that's typically bad for us. Now, the market seems to be totally disconnected from reality, as we've talked about before. and also it's important to remember that the market is not the economy. But at any rate, there seems to be a lot of stuff that's just disconnected. There's a lot of movement based on hope. I always say that a lot of folks are smoking hopium. And it's true. So what we need to do is not know the news is coming up and then try to front run the news based on what we think is going to happen. We want to know that news is occurring so that we can take action around our trading plan, which might mean that we simply don't take action in the market until that news occurs, or wait until the news happens and see what direction the market's going, and then make decisions around that actual market reaction to it, not what we think is going to happen or what we hope is going to happen. We take action based on what the market's doing and how that impacts our trading plan. And I mentioned this on Friday, and I mentioned just about every Friday. If you don't have a trading plan, get one. Figure out what's important to you and take action based on that. So it should be some sort of a documented process. I do this, I do this, I do this, I do this. I enter when these things line up. I manage my trade this way, and I exit when these things happen, or when this profit target occurs, or whatever it might be. You've got to have a plan. Without a plan, it doesn't matter. You're never going to be consistent without a plan. So anyway, part of the plan should be looking at what news is occurring and then figuring out what you're going to do with that. So for me, let's just talk about what I do with news. I know news is happening. As a human, I do want to know what the news is, and I want to know about the news. I stopped looking at intraday news events like this, because what it did is it would create a bias in my mind. I would watch the news I say watch, I'm not like looking at a live broad, but I would watch my calendar, I'd refresh and see what came up. Okay, manufacturing's up. Okay, that should be a good thing for the economy, and I would take an action because I thought the market should react in a certain way. Once I stopped doing that, things get better, because I that stress of trying to interpret what the market's going to do based on something left. Like I said the other day, and I say all the time, what we think the market's going to do is absolutely irrelevant. What you think or what I think or what any talking head on CNN or NBC or MSNBC or whatever station you want to listen to, Bloomberg, whatever they think is irrelevant, because it's just an opinion. No one knows what the market's going to do. The market's going to do what the market does. And we just simply want to be part of that movement. So, know what news is coming up so that you know maybe when not to take an action, right? So, often around news, you see a lot of activity, the news occurs, and you can get excited and like, oh man, this is about to occur, or this is about to happen, and you want to be part of it, kind of jumping in at that very tip of whatever might be occurring. Sometimes it's better just to wait it out, not do anything. So know when the news is happening so that you know how to manage your trading plan around news. Anyway, that's a long diatribe for nothing. So next up, let's talk about what is going on today. So we know we've got news coming up, by the way, at 9 a.m. my time, 10 a.m. Eastern on manufacturing, high impact news. There's some additional news coming out 15 minutes ahead of that, but the high impact piece, it's coming out at 9. So we want to just be aware that that's occurring, and don't get excited if we see stuff happening in the market leading up to it or right at that time. Let's let the news occur and then take an action based on whatever our trading plan says post news. Do we look for confirmations of direction? Do we look for breaks of key support or resistance areas? Do we look for price returning to a certain moving average? Do we look for price pushing the edge of a Ichimoku cloud? Whatever it might be, there is no right answer. It's whatever's right for you to take an action. If those things happen, then you take an action. Right. So over on Forex side of things, aside from news that's coming up, I look at Forex in a manner that just allows me to see what's happening with each individual currency and then find currencies that I could pair together. So, looking over here, we're seeing the 8 major currencies in the marketplace and determining which currencies we may want to trade against one another. And we can see we don't really have a whole lot going on. There isn't any real 1 or 2 currencies that stand out as far as a strong currency that's just kind of steadily moving to the stronger side, or a weak currency that's just kind of steadily moving weaker. We've got a lot of flat stuff today, and when the market's flat, it doesn't really produce a whole lot of opportunity. We want to trade when markets are trending. So when we've got a flat situation like this, it doesn't always create the best opportunity for us to make money, right? Because what we're here for is we're looking for opportunity. Every filter, remember, an indicator like this one, the one that I'm looking at here, the currency strength indicator, any indicator, currency strength indicator, moving averages, Ichimoku cloud, Bollinger Bands, pivots, any of those things, they're just filters. They're just filters. They don't tell us what's going to happen. They're just filtering the market for us so that we can look for a trading opportunity, right? So we're looking for ways to filter out potential trading opportunities. And, one way of doing that in the Forex market is to look for currencies that are moving. Which currency is moving, steeply and rapidly to strength? Which currency is moving steeply and rapidly to weakness? Pair those together. It gives us an opportunity. It says, hey, those two are moving. Those two currencies are actually moving in relation to one another, and that creates an opportunity, creates the right situation for the potential to make money, because we need to have movement in a market in order to be able to capitalize. Unless we're trading options, and for trading options, things can be flat, we can be fine too. But in this type of market, we need movement in order to be able to make money, right? In order to have that best opportunity. So in this case, we're looking at this and we're saying, well, a lot of things are flat. We do have some divergence. We do have the euro that is definitely a weaker currency. It's not like just trending down, but it is weaker in relation to other currencies. So the euro is a weak currency. And we do have the Canadian that's moving away from it. The Canadian's been fairly flat, but it is on the stronger side, and we are seeing some divergence here between the euro and the CAD. And if we look at how it's moved, it's moved 97 pips for the day so far, though, and its average, 5-day average is about 130, 30-day average is about 130, 15-day is 104, and a lot of that's driven because last week we had, we missed some trading days. We had holiday, and we had light volume around that. But if we look at those longer term averages, we've got 130 pips on average. So we've moved basically 100. So do we have another 20 pips in the tank? Yeah, potentially. So that could be an opportunity for us, if we just really had to do something. But what's the probability? So it's what we have to look at. What's the probability of that continuing to happen? So we just look for, those pieces. Look for currencies that are moving. So if we had to say, is there a tradable opportunity? I don't know. Maybe here. We've got some divergence between the pound. You're really if you're having to hunt like this, if you're really just having to hunt, it's not a great. You can always look and find a reason to do something, right? You can always just sit there and hunt through and go, well, if I did this or if I did that, or gosh, if I really look at it and I can see the pound coming down to this area and it's starting to show some divergence from the Swissy, or show some divergence from, what is that, the yen, so maybe the pound yen. But if you're really having to hunt for it like that, it's probably not the best opportunity. The best opportunity is the one where we can come in and we can say, okay, I can very definitively see we've got some divergence between these currencies. And, we've got a strong currency that's definitely a strong currency. We've got a weak currency that's definitely a weak currency. And we want to pair those together because that gives us currencies, one's being heavily sold, one's being heavily bought. That should create some momentum between that in that currency pair, which gives us the best opportunity to make money. Best opportunity for movement. Doesn't mean it will move. It doesn't mean it will continue moving. It's just telling us right now at this moment in time that there might be opportunity there. And then we still have to go and we look and we say, okay, well, what's the volume details show us? What's the pip range on this? If we've already moved 130 pips and the average is 130 pips, is there really opportunity there for it to continue on? Again, it could continue, but what's the overall likelihood, right? If something's at that peak. So things to weigh out a little bit further once we get into that. All right. So long and short of this today is we've got some consolidation here on this. We've got some consolidation where our currencies are really kind of pushing back to the midpoint here. If we had to absolutely just pick something, for me, the CAD and the Euro, so the Euro CAD is the pair on that, would be what to look at, potentially the pound versus the euro. But that would, if you just absolutely had to pick something, that's what we'd look at. But ultimately, this kind of scenario, when everything is just kind of moving back to the midpoint, we're seeing consolidation, which is just telling us, hey, the market isn't in a great position for us to take action right now. So in this case, you sit on your hands, you move on, right? And as we move on, let's move on over to where? Let's go over here. Let's go over here. Let's have a look at crypto. Crypto has been moving last few days. We've been seeing increased opportunity there. Gotten kind of a range just a little bit. Last week we were in a range over here, both in Bitcoin and in Ethereum. A little more so in ETH, that really we got that break out and it's continued on. Remember late last week we were looking at Ethereum. It had kind of flipped over. We had rolled over a bit. We were watching this 207 area for reversals. It did reverse a couple of times for us, and then just burst through there and got some really solid momentum behind it. And now we're back into an upward trend. So our bias on Ethereum is continuing back to the long side here. So what does that mean for us? Well, we had talked about 220 as being a big resistance point, and if we look back over a really long term, we can see how 220 has just really held up over and over and over as a pretty significant point of support and resistance for us at 220. So now we're beyond it. It's broken above 220. We've got this 230 area up here, maybe even 235. So a couple ways to play Ethereum. If we break above 240, we could, so we could look for a long breakout. So if it breaks 240, that'd be our long position. Or we can look for pullbacks back down to 232, 230 area, looking at pullbacks on this. So it just depends on how you want to trade it. If you're trading pullbacks or you're trading breakouts, or if you're trading some combination thereof, which we talk about quite a bit of if you're in an upward trend, looking for the lower highs, lower lows, and then, using that as your breakout point to go back to the long side there. So different ways to approach it. You've got to approach it based on whatever your specific trading style or trading plan is. But long and short of this is the bias is still long. So we'd be looking for continuations to the long side. Same over here in Bitcoin. Bitcoin's been in a bit of a channel as well. This one, though, did break out, got momentum behind us, and we've flipped back over to a long bias on Bitcoin. So same process here. We'd be looking at 9,600. If we break 9,600, great spot to continue longs, or pulling back. If we pull back to this, 9,450 area, even down to 9,400 can be good opportunities to buy the pullbacks on Bitcoin. So a couple opportunities on that one as well. Not a whole lot more to say about that. Over on the future side of things, S&P, crude, gold, what's happening? Well, S&P, we're still in an upward bias. So looking at the 4-hour, we're continuing to have a long bias on this. Looking at the 30-minute, we're back to a long bias as well. We had, kind of interesting day on Friday, to say the least, especially end of the day as Mr. Trump spoke. We just, following at the end of his press conference, we just saw the market just do a face-melting rally to the strong side here. So pushed up, broke above 30.50, and then now in off trading hours, we've been kind of bouncing around between lows of 3,000, just about, 3,010 area here, up to 30.50. So it'll be interesting to see what happens as we get into regular trading hours here shortly. But right now the bias is long on both of these. So we've got a long bias on the 4-hour, long bias on the 30-minute. So with that said, we'd be continuing to look for long trading opportunities. Now, does that mean we just go long with no stop loss? No, of course not. We're going to, use everything that we've talked about before to find the best entry point that suits our trading style and our trading plan. And then we're going to enter a trade based on that. Now, you could be looking at the 30-minute and then taking action on a 5-minute. There's no right answer here. It's whatever your plan is that you're going to execute consistently. That's the right answer. But we'd be looking certainly for opportunities to enter. So we could say, hey, if we get a break above 30.50, that's our sign to enter and continue to the long side here. Or, we could also be looking for pullbacks. And if we pull back, to 30.20, which has been a big point of we can see that it was resistance here. It's been support quite a bit for us at 30.20. So we could look at that as a potential pullback area. If we can pull back down to this 30.20, even 30.30 area, that could be a spot to buy the pullback and see if it continues long. As with anything, just because the bias is long and the bias has been confirmed on different time frames, it doesn't mean that it's definitively going to go that way, right? Odds and probabilities are just simply saying, hey, if these things are occurring, it's giving us an edge that we can continue with that current trend. Trends do reverse. Trends do stop. Trends do stall out. They go flat for a while, and sometimes they even reverse off of that. We have to be prepared in any trade, whether it's in Forex or crypto or here in the futures market. We have to be prepared to be wrong, and we have to be able to set limits to say if this moves against us by this much, whether that's a certain percentage of the account or if it's a number of points or a number of ticks or whatever it might be, we have to be willing to cut that loss. Successful traders that are successful over the long term, understand the importance of taking that loss. It's better to take the loss and be out of a trade and be flat and then find the next best trading opportunity than it is just to hold on to something hoping to be right over the long term. And trust me, I'm guilty of that just as much as every other trader out there is. I've done those things too, and I still do from time to time. I do those exact same things. I'll just get so caught up in what I think should be happening that I fail to take the appropriate action, despite the fact that I know better. I mean, I've been living this since 2008. And I still get caught up in that. And it's human nature. Just be aware of it. Be present. Be aware of it. Be aware that we're doing these things and figure out how we can best manage the trades that we're in and find that next best path forward, right? So anyway, over here, long and short of that is we're looking at long bias on the S&P. We'd be looking for continued spots to find opportunities to go long in this marketplace until the market tells us otherwise, quantifiably, not tells us otherwise in that, oh, we got a bad, news. Some news came out and it had a bad result, so therefore I think the market should return, should retrace or should move down. That's not quantifiable. That's still an opinion, right? Something quantifiable is something that's occurring on your chart, whatever that might be. It's crossed the VWAP. It's the moving average has changed. In my case, I'm looking for crossovers of very simple. I've got a two different time frames of moving averages here, and I just look for those crosses to occur. That's what tells me that I've got a change in the bias. But it could be anything, whatever it is that provides you with that level of confidence to say something has happened to the marketplace and I can quantifiably see that the sentiment has changed. That's, again, it's still what you see quantifiably may be different from what I see quantifiably, but that doesn't matter because we have to follow our own plan. If we all saw the exact same thing in the marketplace, it really wouldn't be a market, right? Because we'd all be doing the exact same thing. That's what creates this cool mix of buyers and sellers. We can all look at the exact same charts and come up with different areas to trade from and different areas for targets and different everything, right? We all are going to have a different opinion about that. And that's cool. That's totally fine. That's great, as a matter of fact, because it's everything is as individual as we are, and we have to be able to accept that. But we need to have our own plan for doing it. We've got to have a plan for doing it. So anyway, I'm going off on all these tangents today. The market is still long, in my opinion. I'm still looking at long opportunities here. So we'd be looking for, whether you're looking for a breakout of a higher area here on the S&P, break, or a pullback to a certain area, that's fine too. Or if you're trading it based on what the bias says, and then looking for opportunities on a shorter time frame by trailing your entry level down, looking for lower highs, lower lows, and then entering based on breakouts from there. There's so many ways to come at the market, and they're as unique as each one of us, and we should embrace that and look for the plan that gives us the best opportunity. The edge really comes in the form of having a plan and sticking to that plan and having good management behind it. That's the edge. Over here in crude, we're still looking long bias. It's been quite a rally here, and crude is continuing to push higher. Stalled out a bit, got into a channel here on the 4 hour. Gotten a bit of a channel here where we're topping out around 34, and just kept bouncing off of that and returning back down. But it has broken above that, and now we're kind of hanging up here at this 35 area. If we look at the 30-minute, we see a definite channel right here between 35 and 35.50. So we're definitely seeing a channel set up here in crude. What does that mean for us? Well, the bias is long. The bias is still long. A lot of people are going to see this and go, man, crude is topping out. Crude needs to fall again. As I've said before, be so cautious about trying to call the tops or call the bottoms. Remember, when crude was falling, from the, just pull this up over here. Give me just a sec. When crude was falling from the 50s back here, not that long ago, just a few months back, so when crude was falling from the 50s, everyone was calling the bottom at that point. Everyone's going, oh my God, it's hit 40, it's at the bottom. Oh my God, it's hit 30, it's at the bottom. Oh my God, it's hit 20, it's at the bottom, right? So just be careful with trying to call the tops on these things. The bias is still long on the 4 hour, and the bias is still long on the 30-minute. So we'd be looking at long trading opportunities, but having stop losses in place if it does move against us, right? We just need to be able to say, hey, if this moves against us, we want to be able to get out of it, and then wait and see if we have conditions that support the next tradable opportunity. So looking at, do we get a pullback to 3,500? Maybe it'd be better to wait until we get a pullback, down here closer to 3,450. If we pull back to 3,450, we'd be pulling back to previous tops, 3,430 even, pulling back to previous tops, which what was previous resistance would become support at that level, right? So, we could wait and see if we get a pullback back down to 34, 3,450, 3,440 kind of areas down here, see if we get a bounce off of that. Or, you could look for breaks and say, hey, if we break back above, we're setting up kind of a top over here on the 30-minute at 35.60. If we get a break above 35.60, that's the opportunity to continue taking that long. But just, figure out where do you place your stop. Is that down here below 35? If it is, that's a pretty big delta between your entry point and your stop loss. Do you have an account that would be able to handle that? If you don't, then maybe it's not a trade for you. Things to consider. Or looking at a lower time frame and see what happens there, figuring that out, and just looking at if we're looking at a lower time frame, still looking at this entry point, but maybe we have a different level of stop loss because we can base that on the average trade range for that time period, for that time that we're looking at, and we can lower our risk a bit by taking a smaller stop, and but still being prepared if it moves against us, being prepared to be out of it, and then waiting for that next best entry. Of course, the other way to approach it is saying, hey, I see this channel here, and if you're willing to be contrarian, you can say, hey, I'm seeing this channel. I don't care which direction it goes. If it breaks above 35.60 or breaks below 34.90, then I'm willing to take the trade in either direction. There's a lot of different ways to come at the market, but the trend, historically, the old quote, what is it? The trend is your friend, right? The old quote. It's the old adage. It's there for a reason. It makes sense. Typically, trends want to continue. Obviously they stop at some point. But if you just keep trading with that trend, you get those nice, steady, longer term opportunities. And that's what we're looking for here by trading with the trend. So different ways to approach it, but again, biases are long on both of these. So we'd look at a break above 35.50 if you're looking to go long, or we could wait for it and see if it pulls back down here to these previous highs, which again would be the 34.40 area, to see if it pulls back, and then looking to go long on that pullback, and taking it from there. No one can tell you what to do. Everybody can tell you what to do. I shouldn't say that, but reality is you're going to have the best plan if you create your own and then just simply apply that consistently. Gold, we're in a mixed bias. 30-minute bias is flipped over, and we've got a short bias on the 30-minute on the 4 hour. We've got a long bias on the 30-minute. So these two are mixed. So for me, that's just a signal to say, hey, we've got a mixed bias. Let's not worry about gold for right now. So I think that's it. I think we've hit them all. We've talked about all the different instruments that we might look at here, and yeah, I think that's it. So let's leave it there. I'll let you guys get on with your trading day. First day of a brand new month. If there's, it's a Monday, it's the first. If there's never been a better time to just say, hey, this is my clean slate. No matter what happened the first 5 months of this year so far, this is my clean slate. I took the weekend, I made a trading plan. I've got it documented of what needs to happen for me to enter. I've got it documented for what my maximum risk is. I've got it documented for how I'm going to manage the trade once I'm in it. I've got it documented for how I'm going to exit the trade. I've got it documented for what I'm going to do around news events and how I'm going to look at those and how I'm going to manage those. Now you just have to execute and make this the month that you do that consistently. Just do it consistently for a month. Don't jump around. Don't trade based on your gut or what you think is going to happen or what Tommy on NBC said was going to happen or whatever, right? Or what the guy on Twitter said or the TikTok person that you watch all the time, whatever it might be. Forget it all and trade your plan. Just give yourself 1 month. Give yourself a month where you just focus. You can do that for a month, right? Figure out your plan, focus on that for 1 month, just like clockwork. And I think you're going to find at the end of this month you've had a much less stress-free trading month, and you probably got better results than you've had. All right,